So in the last couple of weeks, we've seen some extraordinary global geopolitical and economic events. We've seen a very near coup in Turkey, which is high risk for the global economy. We've also seen Brexit, the vote by British citizens to get out of the European Union. Also, very high risk for the global economy. Well, what's really interesting from the South African perspective is Brexit scenario seems to be paying out really well for South Africa. Let's get the expert's view on this. Dr. Adrian Saville. He is an economist. He is the chief strategist at Citadel, joining us on the Moneymakers tonight to talk why South Africa and what the role of South Africa is in a new global economy, because it has changed in the last month. Dynamics have turned on their head, Dr. Saville.
Yeah, you know, Bruce, what I think it really highlights or underscores is the fact that the world in which the world that we invest for is not so much risky as unknowable. And if we had said at the beginning of this year, you know, British property prices down 30%, you know, sterling down 15%, and if you'd offered British property in pounds to South African investors at the start of the year, it would seem to be absolutely without question.
So many South Africans have done precisely that. Yeah. The safest rand hedge in the world, rand hedges, Capco, Capital and Counties, and Intu, the shopping centre owners. Best rand hedges ever. Put the money in, you forget about it, rand depreciates, UK economy flies. What can possibly go wrong? Well, Brexit can happen.
So we have Brexit. From May, the rand is up 10% on a trade-weighted basis. And in fact, over the course of most of this year, the rand now is one of the better performing currencies.
And in January, post-Nene, had I said to you, the rand, worst performing emerging market, global currency last year, amongst the worst over the last 5 years. What was one of the best in 2016? I would have accused you of drinking before you came on the show.
Yeah, and here's a phrase or term that perhaps Citadel can claim to coin, is that's the trumpet moment.
The trumpet moment.
That 2016 could bring us not just Brexit, but also trumpet. Yeah. And if we had gone to the end of last year and start of this year and said, name the two candidates who will run for US presidential election, the chance of it being, or the chance of us having Donald Trump in the hat, in the mix,
completely unthinkable, which then leads me to suggest to you, I put it to you, Dr. Saville, forecasting is a mug's game. You've got to have some kind of view about a future that you want to invest in. But then suddenly the dynamics of the world, the economy, the politics, the social dynamics of the world change in an instant.
I would agree with you. Forecasting is a mug's game, and there's a raft of research which highlights our inability to forecast robustly, reliably, forget about years into the future, often just months into the future. But that doesn't make thinking about what's coming down the line a waste of time. And perhaps one of the best ways to illustrate this argument is to go to John Maynard Keynes, one of the smartest economists, sharpest thinkers of modern times. And
he was working in the 20s, right?
He was working in the 20s and 30s, a period of extraordinary economic, political, geographic disruption. And Keynes' one-liner on this is, I would rather be approximately right than exactly wrong. Yes. In other words, think about scenarios. Think about what could transpire, what might transpire. Give probabilities to different scenarios. And then don't build your portfolios for, well, this is what's going to happen, and therefore this is what I will hold.
Which is what the trap so many South Africans fall into all the time. We start believing that there is only one direction for the rand. Sure, long term.
Until there isn't.
But long term, sure, the trajectory for the currency is negative, simply based on inflation differentials. But people also say our politics is always going to be a mess. Therefore, our economy will always be a mess. Therefore, the currency is always going to be a mess. Therefore, we're going to buy Capco and Intu, and maybe got in at a good price and you haven't lost too much money. But if you take certainty as your forecast, well, then you run into a wall at some point.
Yeah, I think if you're building your investment positions on the basis of forecasts and you're saying this is exactly what will transpire and therefore I'll invest on the basis of that assumption, you should probably position your portfolio to be perfectly wrong.
You must have had clients coming to you on the 10th of December last year saying, liquidate everything. give me the cash and let me get Reserve Bank approval to get it out of the country. It happened to lots of people in your industry in December last year after President Jacob Zuma fired in Tanzania. I mean, and that's precisely the wrong point. At the inflection point, at the crisis point, people panic and behave badly economically.
Yeah, which perhaps is a useful point then to talk a little bit about the importance of stripping away the noise from the news.
Yes.
And whilst there was without question a reason for anxiety, stress, incredibly tense moments through December and into January, very little of it changed the facts about the institutional strength and fabric behind the rand, including...
Although there was no certainty that that fabric would hold.
Absolutely,
yeah.
Absolutely. You know, all of those could have been questioned. Those components were certainly being tested.
Yeah.
But to respond simply to the noise ignores the intelligence, the information, the knowledge that we have around economies, markets, asset classes.
Now, let's go full circle then, back to post-Brexit, emerging markets. The emerging market basket suddenly looks very attractive. The risk on trade, it's ephemeral, it's potentially short-term, it can turn again just as quickly as it started. But for the last month or 6 weeks, money's been flowing into emerging market bond markets. Now, when Turkey nearly had a coup, that threatened to risk a reversal of some of those flows, but then the coup didn't happen and everyone calmed down again. And we're seeing that come through in the bond market, we're seeing it come through in the equity markets, and the impact on our currency and many other emerging market currencies is very positive.
Yeah, and you know, not to go on about the point, but perhaps just, you know, it really does, this recent event underscores how surprising things can be, the way they pan out. Through the course of June, emerging markets deliver a return in US dollars. Emerging market equities give you a +5 US dollar return. Now, where's the contagion gone? Where's that story? That's disappeared off the table. Bond markets, as you point out, have been a source of incredible interest. South African equities, South African bonds have enjoyed the best part of a month of almost uninterrupted buying, and in turn that has helped the rand get from high 15s around the time of Brexit to early 14s as we're speaking now.
And more people I speak to, and I'm interested whether you share the view, are beginning to ponder the possibility of a 12 to the dollar, a 16, 17 to the pound, a 13 to the euro.
This is the institutional fabric that I was making reference to, and the work that we've done at Citadel to try and understand the influences and impacts on currency highlight that, you know, there's sort of three main silos, and when we score South Africa in these three silos, which are about the openness of the country, the strength and capability of management, and then your ability to withstand volatility and bumpiness. These are the three silos. When we score South Africa objectively across these three silos, we rank bang in the middle of the pack, which says we are not the Zimbabwean dollar, we're not the Swiss franc, but, you know, perhaps we're in between. And at the beginning of this year, we were being priced on the Zimbabwean dollar side of the spectrum. We are not remotely close to being Swiss franc in pricing, but it does then suggest that if we do have this institutional strength, that if there is engineering strength in the rand, purchasing power parity starts to become an important part of the conversation. And purchasing power parity puts fair value of the rand, depending on where you start measuring and so on, and what your basket looks like. You can comfortably get to a purchasing power parity of 10, 11, 12 rand to the dollar.
You know, and that then changes the dynamic completely for the South African economy. It relieves a huge amount of pressure on the Reserve Bank, which really doesn't want to have to raise interest rates again. It's been under pressure, but suddenly a bit of rand strength, the possibility of a cloud in the sky dropping some rain on a grain-growing area takes some pressure off food inflation, and suddenly the dynamics change. Already we're not going to see probably a US rate. I say probably now. I've become learned now speaking to you. Probably no US interest rate hike this year. Possibly nothing from the first 6 months of next year, because Brexit's made the global environment quite uncomfortable for central bankers.
Yeah, bond markets are giving us a very clear signal that the chance of a rate hike in any of the large established capital markets is if there is a number lower than 0, that's the number I would give.
Yeah.
But the chance of a rate hike in any of these established markets, 0. Dutch bonds, really interesting history here in that we've got 500 years of economic data on Dutch capital markets. And for the first time in 500 years, in the last 10 days, Dutch bonds went into negative territory.
Suddenly tulips look attractive. We should buy a tulip
tulips
futures.
offer a real return.
Yes.
German government bonds say no rate hike. The British bonds, same signal. And from US 10-year bonds all the way through to the short side of the curve, same signal. Probability of a rate hike in the advanced countries, no.
And there's still people who are very bearish on South Africa longer term, and talking about the possibility of a downgrade in December, and if not December, then certainly in the first half of next year. I look at the global environment and I look at the positives for South Africa, and suddenly December downgrade doesn't seem likely.
In relative terms, South Africa has got stronger.
Relative terms.
In relative terms.
Yes.
In absolute terms, no, I don't think so. There are some components that will work in our favor. For instance, the rand is up 10% on a trade-weighted basis. We made reference to that. The drought effects are starting to pass out of the system. Food price inflation hasn't been nearly as fierce. There's a petrol price cut on the horizon. When you start to throw those into the price inflation basket, South Africa finishes the year with better price inflation than today, but the economy is still very feeble. It's just too feeble.
But it's not as bad as the IMF suggested this week of 0.1%, surely.
What number do you want?
Well, give me a number. You're an economist. Pick one.
Well, we could put 10 times to the IMF's number. We could make the IMF, wrong by an order of magnitude and put South African economic growth at 1%.
It's still not good enough.
That still is not enough. Yeah. And Kim Silberman makes this very lovely insight.
Who is Kim Silberman?
She's an economist at Standard Bank,
right.
and her observation is around the importance of achieving not just economic growth, but economic growth ahead of population growth.
Yes.
So if your population is growing at 1.7%, your economy needs to grow at 1.7 just to stand still on a per capita basis. Then for the ratings agencies to stop their hand-wringing, you need another 1 on top of that 1.7. So South Africa needs to be growing, by Kim's argument, at 2.7.
2.5 to 3.
Yeah. And the IMF, you have to wonder why they bothered with the 0.1. We just call it 0 and let's go home. We're a long way off the required pace.
There we go. Perspective from Dr. Adrian Saville, Chief Strategist at Citadel. Will South Africa avoid the downgrade in December? Probably. Can we avoid a downgrade into next year if we don't get the growth? Probably not. That's the risk we face. Thanks so much for watching The Moneymakers. Thank you to Dr. Adrian Saville, and thank you for watching. Till next time, bye-bye.